Hi, I'm Phil Baker, President and CEO of Hecla Mining Company. Thanks for joining me for this third quarter 2023 update. Let's start with a longer-term perspective. Over the past 5 years, we've seen our revenues increase by 27%, silver reserves by 79%, production by 37%, and generated $767 million of free cash flow from our 3 operating mines. This has resulted in our share performance exceeding our peers. Our long-term focus has generated these results, so this quarter is no different. We're focusing on setting up the mines for the long term. So with that context, let me talk about the quarter. Starting with the Lucky Friday. We received a U.S. patent and the U.S.'s Innovation Award for our new mining method, UCB. This method is truly a game changer. Now, we're not going to have production at the Lucky Friday until early 2024 as we block off the lower part of the 2 shaft and build a new secondary escapeway and ventilation raise. This 3-month project is going well. We are advancing other projects and completing our equipment purchases. We have, in fact, 10 pieces of equipment on the surface ready to go underground. We expect to ramp up to full production in Q1 and have production growth and the free cash flow generation we saw before the fire. At Keno Hill, production has been slowed due to delays in some of the infrastructure projects that are just finishing now, which will allow us to advance development and production faster. However, we are focusing on safety at Keno. Our all-injury frequency rate at Keno is around 4. Greens Creek, Lucky Friday are both less than 1. It's not acceptable. So we are reviewing all of our processes and procedures to get safety right, because we know that excellent safety not only prevents injuries, but also standardizes activities, which increases predictability and production. With the mine just starting up and its expected long mine life, we must get safety off on the right foot. We're going to take the time, whatever it is, to make that happen. Greens Creek had another consistent and strong quarter, producing 2.3 million ounces of silver, and we are increasing silver production guidance. Costs are in line, and the mine has already generated $100 million of free cash flow. Casa Berardi had a very good quarter, progressing on its transition to an open pit only mine, reporting cash costs and all-in sustaining costs well within guidance, and building the infrastructure that sets up for long-term production. We saw the need to make a fundamental change, which we implemented this quarter, and we're already seeing the benefits of those changes. As a company, silver production guidance is only slightly lower, silver costs are unchanged, gold is unchanged other than a little lower cash costs. The safety performance at our mines, with the exception of Keno Hill, has been one of the best in the industry, with an all-injury frequency rate consistently lower than the U.S. national average. Silver was 38% of revenues, generating more than $120 million in free cash flow. Soon, silver will be more than half our revenues. The balance sheet is strong and has good financial flexibility with a leverage ratio of only 2.2 times, despite Lucky Friday's suspension of production and our investments in Keno. Our liquidity is adequate at $165 million, and I expect our leverage ratio will be less than 2 and liquidity will grow substantially once Lucky Friday is back in production and Keno Hill matures. Just a little bit on exploration at Keno. Our exploration is finding more in a number of deposits at the property, but we'll just talk about the Birmingham Bear Zone's Bear and Footwall vein. On the Bear vein, outside the resource in the red eclipse, we're finding more grade at 163 ounce over 7 feet that appears high enough to add to our resources. On the Footwall vein, where we're already planning to mine, we have higher and wider intercepts, 36 feet of 36 ounces, 17 feet of 56 ounces. Finally, let's look at solar because it's fundamentally changing silver. Last year globally, 269 gigawatts of solar was installed, and the International Energy Agency estimates that in 7 years, the world will install almost twice as many solar panels as we have this past year, about 500 gigawatts worth. Not an unreasonable estimate, since that is only a growth rate of about 9% compared to the 12% growth rate solar has had over the last 12 years. It takes about 500,000 ounces of silver for every gigawatt installed, so last year that was 140 million ounces, or 12% of total demand for silver. In 2030, we will use 100 million more ounces, or almost 250 million ounces, which is 21% of total demand if demand doesn't grow. And it's not likely that there won't be more demand for silver for other uses. To put 100 million more ounces of demand in context, that is the production every year of 2 more of the largest mines in the world that produce silver. Or another way of looking at it is 10 Greens Creeks, which is the 11th largest silver mine globally. Clearly, the additional demand for silver that we will have over the next 7 years is not going to be met by more mine production. Even if deposits are discovered, you can't get them permitted and constructed in time. I'll be the chairman of the Silver Institute for the next 2.5 years, and I recently spoke at the LBMA conference. What I was struck by from that conference is that well-respected, knowledgeable market participants are thinking about silver in the same way they have for the past 40 years, primarily as torque gold. I encourage you to think about silver differently, because with the demand for silver so tied to solar, silver is not going to behave like it has in the past. If gold or copper goes up, I'm sure silver will. But with solar demand, regardless of what gold and copper do, higher silver prices are inevitable. For more information, please go to our website, hecla.com or thesilverinstitute.org. Thanks for watching.